Hey everyone, the professor here, and today you have bonus analysis. So I'm going to be covering both the crude oil analysis and we're also going to jump into the natural gas analysis. So if you want only one of the two deep dive analysis, then you'll be able to go down below in the video description into the timestamp area and just click on the actual analysis that you want. So without further ado, let's take a look at crude oil first. Okay, so I'm going to do something interesting and different today because I think this is really going to help out a lot of traders. And what I'm going to do is I'm going to go ahead and come up here and I'm going to grab a vertical line and I'm going to go to the beginning of the year, which was right here. We're going to kind of focus in on this area when it comes to crude oil. Now, next, what I want to do is I want to grab another horizontal line now, and I want to go to the high of this year, and I'm going to mark this up. And then I'm going to grab another horizontal line, and I want to go to the low of the year for 2023, as you can see right here. Now, what this allows us to do is to kind of get a wide picture of crude oil. And as we begin to come on down to smaller time frames, you're going to see this kind of grid map focus that I like to do, especially as we get into very volatile times. I think this helps us have a better vision for crude oil. The next thing I want to do is I want to go ahead and grab another horizontal line. And if you notice, I am on the 8-hour chart. I like this on the 8-hour chart a little bit higher than the 4-hour chart. And I want to begin to mark up these critical areas just based on plain sight. So what I'm looking for is for where my eye can pick up on areas of support and resistance if possible on both. So I just want to mark up some of these general areas. And then as we move down, we'll be able to fix some of these areas here. We can see right in here, we definitely had some traction. And then we're going to go ahead and mark up one more somewhere right about here. We can definitely see that support and resistance. So now that we begin to do that, okay, we begin to look at price from 2023. And obviously, I'm going to grab another vertical line and I'm going to just put it over here to the right a little bit so we can kind of focus on this is where we have been for 2023 so far for crude oil, okay? And one thing to keep in mind is right in here, okay, that we, based on where price is right now, we did take out these highs that were up here. We took it out here once and we took it out here twice. So now what we're going to do is we're going to kind of move up here for a minute. I'm going to make this chart a little bit wider. And what I want to do is just give you some perspective. Again, we're kind of focusing in on this area right in here. Is I want to go all the way to the monthly chart. I kind of start at the monthly. We are in kind of mid-October, obviously, 2023. But just to kind of give you some perspective, okay, this has been January to October, okay? This has been January 2023 to October. So you can see here that we were somewhat bearish for the first half of the year. And starting in June of this year, we've been primarily bullish. And now we had this pullback that we've seen since the beginning of October, okay? Again, some of the interesting things to note here is where price was reacting, even though we marked it up on the 8-hour time frame. We can see here how price still was reacting within these levels right in here. So again, something to keep in mind that we do know that we have those strong levels, even though we created them on the 8-hour chart. For the most part, they seem to be respecting on the monthly chart as well. So what I want to do next is head over into the weekly time frame. Again, I just want to kind of give you this 360 perspective so you can kind of see where we are at on the weekly. So as we begin to look for price action, we begin to look for trading strategies. Well, the first thing that stands out is that obviously, I talked about this earlier, right? We had broken those highs when we broke above here on the weekly when we closed at 86.30 or so, okay? And then now we've seen this retracement come on back. But again, a lot of traders don't spend time on the weekly. So as you look at this chart here, the first thing that should kind of stand out is, where did this retracement take place? Like, where was a good area for this retracement and where did it happen? Well, some people will put the Fibonacci here from the wick, and then you can see we came down to the 88.6. Some will start the analysis from where price began to take off. Okay, right here's price closed up, and then we are between the 61.8 and the 88.6. So again, for those folks who are investing in crude oil, for those folks who might be swing trading crude oil, you're going to be using monthly, weekly data to look for some entries, and then you're just going to wait for the long term, on crude oil and where we are at now. So I just wanted to give you a little bit of perspective so you can begin to see the bigger picture and understand that, this 94.85 was our high, which was created just last month, September of 2023. And our most recent low, I would consider this candle here, which was the previous month, August of 2023. And so we did see a lot of this consolidation in this area right in here. And then we finally had the breakout. Now, as we look further, and we bring this down, we do have to understand that after this high is broken, if we do break this 95, I am just going to kind of leave this up here, understanding that we do have, price that has reached this level up in here. And I'm just going to put it right in the middle in case we do start getting up towards those crazy, crazy numbers. So again, just some perspective of where we are at with regard to crude oil. Now, if we go over here, and again, this is WTI crude. Okay, if we look over here and we look at this last week, we can see that we kind of bounced in this area, and we're at about 80% of this huge candle. So obviously, we do not know if we are going to continue to the upside or if we're going to begin to revert down. Right? If we look at it on waves purposes, meaning, one up, one down, one up, one down, are we going to create a new high? That is going to be tested on the various time frames. So what we want to do next is that we want to drop to this daytime chart, because now we can begin to see a little bit clearer where price is done. And again, I just kind of want you to look at that chart there for a second and see how crude oil, okay, WTI oil, has moved in 2023. Remember that every horizontal line, okay, this was the beginning of 2023 in January, and we are currently here in this area. I just made it off here to the right. So we can kind of see here how these levels have really worked very, very well, right? We can see these levels have really worked almost at every time frame that we have marked up. So we have to understand that these are levels that we cannot ignore, okay? And now we are approaching on the daily, okay, a very critical level, which is going to be right here, okay? What are we going to do with this candle there? So we, in a sense, we are using this grid to kind of trap price, okay, which is kind of nice to do. And I think a little bit easier for everyone to understand, even if you are, brand new. So if we look at this daily kind of time frame, right, we had made a high here, and then we came down to make a lower high, and then we've got this high, and then we've got this lower low. Lower high, and then we've got this area here that created a higher high. We had a higher low, then we had a higher high, we had a higher low. So now the question is going to be, okay, crude oil, what are you going to do next as we look at the analysis here? So this allows you to be able to kind of look at the chart from a different perspective. then a whole bunch of indicators and markings up. This is the way I approach my weekly analysis. And even though these zones have been strong for quite a while, I always delete my chart drawings and I like to start from scratch. Why? Because it keeps me focused on what I'm doing and it gives me muscle memory, a fresh perspective. So as I'm trading throughout the week and I'm setting up my alerts, I've already done my analysis. I kind of understand where these areas are at, and I have a formulated plan as I move forward with crude oil. Okay. So again, we are kind of looking at this here, in this particular circle here, we can definitely see how price, again, we took advantage of this last week, even though price took off from us on the Sunday gap, we did come back to close that gap. So this here is going to tell us a lot because there's a lot of things that we can look at, but I want to kind of break that down on these smaller time frames. And please understand again, I know folks in my members group have heard me say this over and over and over again, right? Price is never a zone, is never a straight line. It's an area, right? It's an area of value that we look at. So we are at a particular area of value that we have to respect and understand, okay? So what is price, going to do there? And again, that's what we have to wait and see. And I want to drop down now back to this 8-hour chart so we can begin to look at our bubbles in a little bit clearer fashion. And we can kind of begin to see, again, what is happening here. Now, as you move down with time frames, then you have to adopt, right, newer areas of support and resistance. So as we drop down now to the 8-hour, we can see here that we've had, a touch here and back down, a touch here and back down, and support here and here. So this is how, if you're going to be an intraday trader, you got to understand that there are going to be zones within time frames. You just can't mark it up on the daily because those are a lot of points in between that you could be draw down or miss out of because you're not coming down to the smaller time frame. So we clearly here are going to be looking at a couple of things as we drop down. And so we're going to look at fib levels. We have to look at whether we're going to close above, whether the gap is going to go in. And again, those are all things that we definitely want to talk about in the second half of this video here as we prepare to jump into now what I call the second half of the crude oil analysis as we drop to the 4-hour, the 1-hour, and then the 15-minute chart. So again, I just want to take this quick time. If you like this type of diagramming, if you're seeing some value on breaking it down slowly so that you can see it, whether you're a new trader or a seasoned trader, you can definitely go down below, drop that like button for me. I would greatly appreciate it. And this is what we do. And I plan to do a lot more of this, even for Forex pairs. We have a lot of brand new traders in our members area who, again, oil and the indices and gold, not really were new traders. They should start with simpler pairs like AUD USD, Euro USD. And so I'll be breaking this down as well for those of you who are brand new inside of our members area. So now let's go ahead and get into our 4-hour analysis, because now we can begin to look at some of the technicals that we're seeing here. Again, as we look at the zones, we understand we are in a critical area right now when it comes to crude oil. So here we begin to see and say, okay, what's going to be our game plan as we kind of develop, what is happening here? Well, on the bigger scale, if we take this high down to this swing low, then we are currently right at the 50% Fibonacci level. Do we get retracements on the 50%? Yes, we do, right? So do we get them at the 38? Yes, we do, as evident right here. Okay, as evident right here, the 38 rejected here for quite a while, and then we had a nice drop. Now we're at the 50. So we kind of have to wait to see what is going to happen here. Do we get rejection at the 61.8? Absolutely. We saw it right over here, right? Do we get rejection at the 88? Absolutely. So this is really where, as traders, you have to decide, what is your risk and what is your place for entry. And this is why having a trading plan is so important. For me, for crude oil, I no longer look at these lower levels, right? If I don't get into a trade, I just don't get into a trade. But I look for levels between the 61, right, and the 88. I look for levels somewhere in here to get that blue light special, better price entry. So sometimes I'll miss a trade because it hits right at the 61 and maybe I missed it by a few points, or sometimes it pushes deeper like it did over here, right? And then that would be an entry because it's kind of in the middle, and then we write it down, okay? So again, you have to kind of choose where you want to play in this market and just be consistent in that. Whether you miss some trades, you're going to get some trades as well. So again, you can't always be jumping on. This is why studying charts as I have, I use these areas up here because I have seen crude oil more times than not push a little bit deeper into the 61.8. They don't always respect the lower levels. And again, you might catch some points here. That's great, but I'll wait to see if we can get a further push up. So again, it just depends on your flavor. So as we are sitting here now on the 50%, we have to kind of develop this game plan, because you can do fib levels from different areas and you can come up with a different hypothesis. Okay, so here, if I grab a Fibonacci and we go from this wick, from where price began to drop down to our low, then we are in this area that I just ironically talked about, right? We're in this area of this 61 to 88.8 area, right? So if I'm going to draw my fib level there and I want to look for an opportunity, this is now in an area where I would take my first entry in trying to grab my 20 points on crude oil. And again, for those of you who might be brand new, let me slide this down. When we talk about crude oil, the way I believe that you can be consistent and profitable is to take 20 points at a time. Okay, 20 points at a time. I've studied this chart over and over. And again, 20 points at a time can really just be one candle that you need. And if you do this, right, and if you, whether you want to allow a runner or not, but if you do this, like we do, let's say just twice a day, right? Now you're equaling 40 points a day. And that's going to be more than enough as your lot size increases, right? So again, this is my strategy, 20 points at a time. And the reason why I keep harping on that, over and over, because if I do go in on a rejection of a 61.8 here, if you just look at this wick rejection right in here, right from where it rejected down, let me go 20, 20, 20, right? That right there is 20 points, 24 points. So you don't need a lot of movement on crude oil to be profitable, right? Most of these candles are going to be 40, 50 points in length. This big bullish candle was 233 points, right? That was over a $2 move right there, right? We only won 20, right? We're only looking for 20. So if you can get in and grab 20 and then find another place based on strategy to grab 20, you are going to do very, very well. The greedy do not survive in this market. Remember that. The greedy do not survive in this market. So as we kind of go in here now and we're looking at this, we have to understand we're going to have to look at the factors of gap. But either way, we are going to now jump down to the 1 hour. And what I want you to do is I want you to start seeing as these bubbles are moving, right? And we move this chart over, right? Can you see the structure that is happening, right? Can you see the structure that is happening? Can you see where these zones have rejected? Now, if we look right over here, right, we saw price drastically drop from here. And if we go right across, we can see that happened here and we can see that happen here. Why? Because it's a fib level of a 38.20. So what does that allow me to do is I'm going to go ahead and put another horizontal line there on the 1 hour, understanding that price has already shown some forms of rejection in this area, because I would not want to buy from this area that has shown resistance, right? I'm going to wait to see if it breaks and retest or if it's going to drop down to another level. So this is why having zones within zones allows you to gives you a better opportunity to be able to grab your 20 points, get in get out, and move from there. We do the exact same thing here. So if you've done the Fibonacci's correctly, you're going to see that the Fibonacci's also act as support and resistance. So you can also drop another one right about here, the 50, where we saw a lot of this traffic happening. Okay. And again, remember, these are never straight lines. They're areas of value. So as we look at this, the first thing I want to do now on the 1 hour is that I want to go ahead and label my gap. I'm a visual person. Let me grab my text. And this is going to be our Sunday gap right here, because this is where price closed. So remember, for those of you that have asked me, the gap is nothing more than where price closes and where does it open. If there's a break in price, that's a gap. Whether it's a 1 pip or 100 pips, that would technically be a gap. So it's just a matter of where price closes and where price opens. You usually will see this a lot more on Sundays across Forex pairs in general. And then sometimes you'll see it even between that 5 o'clock and 6 o'clock closure. Price could gap open. As brokers settle in on their prices, you might see a 2 or 3 or 4 point pip spread on a very small gap that usually closes within seconds. So again, there is going to be our gap, and our gap is also in a strong area of resistance as well. So price action is going to dictate our next few scenarios that we are going to talk about now on the 15-minute chart. And again, if you're here still watching, thank you so much for your loyalty. I appreciate you. Head down below to the comments. Give me some good feedback if you feel like. And we are going to be jumping into natural gas at the end of this analysis. So we're kind of here right now. And again, I kind of wanted to bring this up a little bit here because we talk about patterns all the time in trading. Okay, so the reason why I made this chart nice and skinny like this is because we talk about this all the time in trading, and again, how those W and M patterns are formed. But what I wanted to do is let you see it. For those of you that maybe do not see it on a bigger scale, we can see that this made a perfect W back up, and we don't always get them that good. But as we bring these charts out, you're going to see that trading in general is all W and M patterns. But of course, the key is, are we catching it at the right time? And are we holding trades long enough for those of you that want to swing trade and what have you? So as we drop now down into the 15-minute time frame, we have to understand a couple of things. Number one is, as we go here, we did break these highs, okay? So that signaled to me that we were going higher on crude oil. So that's why we went higher. Now we're in this juncture right here. I'm going to grab this right here. You can see the highs right here, and I'm going to move this across, right? And we are currently there now. So what's going to happen is, and as I make this a little bit bigger, right, if we clear these highs right here, and again, we'll give it a little bit of a gap. If we clear this, 87, 90 area, maybe the psychological number of 88, we talk about the zeros and the 5 zeros, how they're very well respected with crude oil. Then again, we have to assume that we are going to have this type of situation happening, coming back here, coming back to the area, and then just going to our, our next level, which would be right around that $89 mark. Okay. Which again, if we back this up, we can definitely see we have a level right about here. And ironically enough, that is right around the $89 mark. So that is, one scenario. If we get price to come above that 88.05 area, then we're looking at that scenario happening. The other scenario is that at least temporarily, if we have a retracement, then we see that retracement come back down, and then we have to pay attention to this area right in here, because we do understand that this fib level, again, will act as an area of support in this particular case, right? So if we cannot close below 88.68 or so, right, then we can expect possibly a bounce back up. And this is why, trading zone to zone, in my opinion, is just so much easier as you drop down. But you've got to understand the different levels and zones on the higher time frames, because you could be on a 5-minute chart and you enter a buy, and then the trade goes up 2 points and then crashes down, and you don't know why. You think some crazy news came out, and in reality, it hit a strong resistance level at the 4-hour, the 8-hour, the weekly, or the monthly chart that you never knew about. So, as we move forward, that's why I like to mark these up along the way, because it gives me an understanding, right, where price is and is it worth me getting in if we're very close to an area of support and resistance. I'll do the Fibonacci levels on the 1-hour, keep those levels for support and resistance as I drop down to the 15. But these aqua lines, as you saw me create earlier in the video, have already begun to establish support and resistance on a bigger time frame. So I understand that if price is dropping here, right, I do not want to get into a sell here because I understand that I'm at a level of support. And so I want to wait until we clear there, possibly retest, and then give me an opportunity to drop it down. So we are kind of standing still right now on crude oil. We know there's a lot of pressure right now on crude oil. We know what's happening over in Israel and the Gaza Strip. We understand that that is going to have an impact. Demand and energy, petroleum, Saudi Arabia, all that will play a factor. I'm usually not a big fundamentals guy, but you cannot avoid fundamentals right now globally because of everything that is happening as well. So I hope you got some value on crude oil. Again, members area, you'll be updated as we move throughout the week as well. And now what I want to do is I want to kind of jump over to an analysis that I've been requested a lot for, which is natural gas. A couple of pretty neat things I found in a quick cursory review, and I want to share those with you now in our natural gas analysis. Natural gas analysis. And for those of you that are, curious, I am using the natural gas chart provided right here by capital.com in case you want to use this chart, or maybe if your chart looks a little bit differently, especially the pricing. I just wanted you to know which chart I am using for this analysis. So I'm going to approach this the exact same way. Let's take a look at where we have been since the beginning of the year. Okay, and we're going to obviously be going out in deeper areas. Next thing, let's take a look at our low for the year, and then let's take a look at our high for the year. So you can kind of see just in this quick grid box as we begin to kind of track price is that we are on the higher end scale when it comes to natural gas. Okay, we can also see here this level that was definitely taken out, right? We saw this one here, and then we also saw this one level here where we had this touch, and then we eventually came back, and then now as we move across, we can see the level here. But I want to go ahead and continue to mark this up as we look at not crude oil, natural gas, right? I want to look for those areas where we have seen some of this price action happening. And then again, we have to understand that we did reject this level here, which was previously rejected back in January of 2023. So now, as we begin to kind of zoom in here, okay, again, we are now looking at our 8-hour chart here. We got to understand this is, for those of you that are trading natural gas, this is kind of what we are working with right in here, right? It's kind of the same that we look at for crude oil when we do our analysis, understanding that these are never straight lines. There are going to be areas, and we are going to give you some of these areas for now right in here, because this is the area that we are working with, okay? And as we drop down, we're going to see if we can identify some areas to the top side as well. So the first thing that stands out to me when we look at natural gas here is a couple of things. Number one is we have seen quite amount of rejection. And again, we were talking about 8-hour bars here. So this is over, a couple of days worth. Price did not want to go over this 3.5781 area. Okay, number one. Number two is we previously had this rejection here, as you can see by the wick, and I'm going to kind of mark this up because again, this short-term structure would not mean it's going to drop down unless we close below this area, because we could have a bounce again from this point right here. And that's kind of where price is at right now. So maybe we go into some form of consolidation as we move forward, right? But it'll be very short-lived. It'll be very short-lived. So as we do this now on the 8-hour chart, we are going to begin to kind of zoom in here. And I just want to kind of show everyone, when you hear me or any other person that trades use the term break and retest, this is an excellent example. Right? This red candle is an excellent example. And even though it's on an 8-hour chart, I want to show you this on the different time frames. So if you can learn to spot it, that is an awesome entry. You came from a strong area of support, right? We've already identified that. And that's what you're looking for. You're looking for that break and retest. And you had multiple opportunities to get into that. So if I leave that arrow right there and I jump down into the 4-hour, you can see here again, that was the retest of the area. Nice opportunity for you to take somewhat of a long position like this, right? Let's say you're going to take it back up to the next highs, or wherever you're, and then dropping it right below the most recent lows, which would have been right here. That would have been a break and retest with an amazing almost 4-to-1 risk to reward. If you drop down to the 1-hour and we find our arrow, you can see here again, that's what it looked like on the 1-hour. Over 9-10 hours of rejection, and then price eventually took off. That's what you're looking for on breaks and retest. And I'll show you one more on the 15-minute, how it looked like. Again, here, all these candles rejecting. You can almost tell yourself, I'm going to take a high probability trade of entering a buy because of all that rejection in that area. So just kind of wanted to point that out for those of you who are, still trying to understand breaks and retest. And the same kind of happened backwards in this area here as price kind of came back up to retest this area. Let me grab this arrow, right? When price dropped back down, came back up to retest, there's your entry, and then you're taking it down, understanding that there must have been a smaller area of support down here on a smaller time frame that we will find here in just a minute. So that's kind of the view from the 8-hour. Here is our view now from our 4-hour. And again, as you're developing a game plan, I can already tell you that this area, we would have to have candles close below this area right in here if we expect price to possibly drop even further, okay, with the same scenario of a break and retest. And then we've got our 1-hour chart here. Again, we are at that critical stage right now. And then now as I go over to the left, right, I begin to look, you can see there's nothing here. We are in dark, dark skies because we haven't been this high in a long time on natural gas. So there's really nothing really concrete. So when there's nothing really concrete, I'm looking for the short-term areas that have been identified. Like, where did price see a rejection? So this would be the next area I would expect price to come to if we close below this area. And then vice versa here. Okay, this would be the next area. Even though this is a large area, right, I don't have much traffic to the left. So I'm going to respect for now, maybe somewhere in the middle, even though I am looking at this candle here, lots of institutional money sitting right there. So I'm actually going to mark up this area as right in here as these areas. So these would be the areas that I would be playing off as a natural gas trader. Okay, I would be looking up these areas. Now, if we, for some reason, right, set a candle to close up in this area, and we'll make this green, then you should be looking for that rejection down and then possibly going back up to our next level. Now, we can't see that level, right, so much from the 1-hour, but again, when we go to the 8-hour chart, we can begin to look at these levels here, and I would mark up this level right here because this is when we had a previous rejection. So these are kind of the levels that we are looking at as we are identifying areas to enter natural gas. And just like any other pair, natural gas will probably have some form of a gap as we open on Sunday. And again, I haven't studied it enough to tell you what the average time of those gaps are. But again, we will identify, for those of you that asked me, and to identify, this would be our gap scenario here for natural gas, right? So we begin to look, if we get, again, areas of rejection here on the 5-15 minute without closing down here, then we can expect natural gas to come back up to this area right in here. That's something that we have to wait for price action. If we get a candle to close down in this area, we'll make this red, then we should anticipate price to come back up and then price to start dropping to lower levels. Now, as I make this closer, understand that this is a smaller area of support in this level because it was created on a smaller time frame. So it could blow right through it, but I think obviously we'll have a touch at this 3.2942 area for sure. I'm willing to bet on that because of it. Okay. So again, as we're looking at this, you've got to identify what is going to be your area that you are looking at. Okay. So I am going to bring this chart over one more time. And again, this won't be as deep as I did for crude oil because I just wanted to give you all some levels. So if you are trading natural gas, what I would guarantee that you should do, in my opinion, is pause this video and then begin to mark up these levels so we are consistent in our levels for any future analysis video this week. We can talk about these key levels. Okay. Now, one thing that stands out is right here. Okay. Because we are sitting on a 1 hour, we've seen rejection of support and resistance here, right? We've seen that resistance come back down. We've seen support. So now we just introduce a brand new level. So you're not caught, which is nice because now we're much closer to this area right over here. Okay. And then the last thing I want to do for natural gas, I don't want to get confused, is kind of look at, if we were going to go higher, what would be the fib level? Well, we would go from this low to this high. And as you can see right here, we are sitting perfectly, okay, perfectly on that 61.8 area. I wanted to move this gap out of the way. But as you can see right here, we are sitting at that 61.8 area. So we might see rejection in what I call the blue light special down in this area again, and then see another bounce up for some natural gas.